We deal with investments every day. I would like to use this platform to help you understand some of the finer details in the investment landscape and guide you through some of the things that we deal with on a daily basis. Hi, I'm Gerrie Cilliers, Wealth Manager at PSG Wealth R21. Can you tell me what is the single most contributing factor to your portfolio reaching its intended goals over the long term? Today I want to take 2 minutes to discuss portfolio construction and asset allocation in your portfolio, but in a very practical sense. For your investments to generate a return, we need to invest them in specific instruments. The idea is that these instruments will reward you with a return on your capital over time. And these underlying instruments can mainly be grouped into one of 5 overarching asset classes, as we call them. But it's extremely important that you understand what is the characteristics and the strengths and the drawbacks of each of these individual asset classes to know what contribution it can make to your portfolio. As a practical example, I'm going to use a graph over the last 10 years to illustrate to you how each of these asset classes has reacted in the market and market cycles. So the first asset class we're going to look at is cash. Now, cash role in your portfolio is very short-term in nature. It's very defensive and it is very secure, consistent, but cash unfortunately doesn't have the ability to give you above inflation returns in the long term. So very specific role for short-term investments, not really suited for longer-term investments. So bonds would generally be made up of government or corporate bonds. It will provide you with a nice stable income, a nice stable return, but also the likelihood of it providing really material above inflation returns in the long term is quite low, but it does have a role to play in a portfolio. The third asset class is listed property. Not a big favorite in South Africa at the moment. You'll see on the graph from 2018 and then leading on 2020 during COVID, it's taking a massive beating. It has gained some popularity back in portfolios, but be aware the volatility in listed property is much more than you would expect, especially when you compare it to physical property as an asset class. The fourth asset class is South African shares or equities. Now, this asset class can be quite daunting as the markets has been extremely volatile in the last few years. But equities is the asset class that can really provide you with proper above inflation returns in the long term, where you have time on your side to ride through down cycles in investments and participate in the subsequent upside and recovery of the market. As you can see on the graph, during the COVID period and the subsequent recovery thereafter, and this is cycles that we expect in the equity markets. And the fifth and last asset class is offshore. Now, this would mainly consist of offshore equities. Similar to SA equities, this asset class can be volatile in the short term, but provide you with handsome above inflation growth in the long term, as well as hedge South African investors against devaluation of the rand against global currencies. So a very important aspect from a South African investor point of view. Most investors' portfolios will consist of a blend of these asset classes. But what I find when dealing with investors is they are not specifically aware of how their investments are allocating capital to these asset classes. And this is something that's really important and you should be spending a lot of time on. But remember that asset allocation forms the foundation and the basis of any investment portfolio and will by far be the biggest contributor to your portfolio reaching its ultimate goal in the end. If you need any assistance or would like to have a conversation with regards to your investment portfolio, please reach out to us and we would gladly assist.